What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoundHound. In my videos, I often enough bring up a lot of the technicals, what's really moving it on that day. If there's some operational updates, I bring that up. But for the most part, I don't really touch on their balance sheet all that much. That, on the other hand, is what bears love to bring up. So I wanted to go over that as well as when they potentially will be needing money. So I'm going to go over all the things that you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So starting off, when it comes down to it, they have not disclosed the date of their Q4 earnings. It is estimated for it to be February the 28th after hours. Just an estimate, of course, but earnings per share, negative 8 cents. And then revenue, 33.73 million over the last 90 days, 0 positive and 5 negative revisions to the earnings per share. So ultimately, I'm going to be going based off of the Q3 numbers. And so that is up until the end of September. So ultimately 25.1 million in revenue. So pretty nice improvement. They have been improving quite a lot. So 89.13%, that's year over year, of course. But looking right here, 135.6 million in cash and cash equivalents. It's been a while since they've diluted, and actually that's one of the highlights that they've been bringing up in previous earnings is the fact that they have a lot of cash and very little debt. And honestly, got to give them that. They are 100% on point with that. But still, needless to say, a lot of bears bring up, hey, this company isn't profitable. They're just going to be burning cash. So ultimately, with that 135.6 million in cash equivalents, if we kind of look at what they're burning through from operations, so from the last quarter, 35.3 million. So you can kind of see that they have been starting to really ramp up. And most likely, my estimate for Q4, unannounced yet, is probably going to be around that 45 to almost 50 million. That's just, again, my estimate. But you can kind of do some basic math. You have that 136 million in cash equivalents, cash from operations, kind of results in them having a runway for the most part of two quarters, 2.5 quarters. No company ever leaves it to the very end. So that does mean that probably end of Q1, or if not beginning of Q2, is when SoundHound is going to need to dilute. Don't get me wrong, just me saying that does not mean or constitute that you need to sell or panic sell. There's a hell of a lot of companies in this exact same position. The only difference is as well that those companies usually go down the toxic debt route. Couple companies I do cover kind of go that route where they issue either notes or preferred stock that have a convertible aspect to it. And ultimately, that is what shorts love. Shorts just pounce all over those types of companies, bring them down. SoundHound hasn't gone that way. So I think in general, it's fair to assume that they will need more money. That's just kind of the writing on the wall up until they do obtain profitability based on what analysts are forecasting on an annual basis. Not up until probably 2027 is when they feel, or possibly even early 2028 is when profitability is going to occur. So given how much they're burning through, that is something that, again, as an investor, you need to factor in. So a lot of people like to throw price targets saying $100, $150. And yes, I've seen some of those in the comments, very high price targets. And it's not nothing wrong with being very optimistic, but you also have to factor in from now up until profitability, they will be needing money. So once again, I just wanted to kind of point that out, give you the good, the bad, and the ugly, no matter what. But essentially, you are seeing some pretty good improvement. So looking on a quarterly basis, so this earnings right here, it does show negative 37% year over year. But going forward, so 30%, 33, 5%, 65%, and so that's year over year growth. And then looking at the revenue, this is kind of the bread and butter. So 96.7, 177, 170. So this is definitely shows consistent improvement. Not only that though, going back over to the annual basis, so in Q3, they did give revisions and updated their 2024 and also 2025 estimates. So full year 2024, they did forecast between 82 and 85 million. And so that kind of puts it smack dab in the center. So based on 6 analysts, 83.87 million in obviously 2024. So resulting in 82.83% year over year growth. Very good stuff. Goes over right here. So the forward PS ratio. So any company that isn't profitable, you typically look at the PS ratio. And this is as well one attribute that bears typically do bring up, saying, hey, this does not constitute this multiple whatsoever. And I think in reality, in all fairness, for those of you that have watched my channel, I do often enough bring up Palantir. Palantir, that's technically, if you think about it, based on what they do generate in revenue, $17 is kind of expensive for it. But guess what? It's at $72. Wall Street just always has a very difficult time trying to appropriately price innovative companies, and SoundHound does fall under that category. So in my opinion, don't always listen to all the bears. It's good to have an open mind and realize good, bad, and the ugly about any stock that you are investing in. But having a high PS ratio doesn't mean a sell. It just means Wall Street doesn't really know what the fair value is just yet. So that's just my viewpoint. Going back over here though, for 2025, they did say the range is going to be roughly 155 to 175 million. So once again, going back over here, analysts, 7 analysts are forecasting 164.13 million. And so that is 95.7% year-over-year growth. So yeah, that obviously you can kind of see the PS ratio has definitely reduced, kind of reset. So 2025 for the most part is kind of starting off on level ground, if that makes sense. So potentially if you're still seeing good growth, that does mean that the stock price in theory could go up. And plus, even let's say for Q4, if they come in better than anticipated, then this will go up, meaning the share price considerably. So a lot of innovative stocks move very, very fast, and that's just because of their 4P PS ratio. Future anticipated growth goes up, and then it's a domino effect, right? So if let's say they exceed on their Q4, well then now Q1, 2, 3, 4 in 2025 is forecasted to be higher. So of course constituting a higher price. So all in all, this is a quick summary of at least what to look forward to, profitability, when they will be needing to dilute. So again, probably end of Q1, if not sometime at the beginning of Q2. That's just my estimate, of course, but still, like I said, that won't really constitute a massive sell. You shouldn't sell right now because of that. But I'm not here to get you guys to do anything. Buy, sell, hold. You just do whatever floats your boat. Hopefully everyone's having a good day off. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. One final thing, pop over to my Patreon where I give buy signals on stocks, options, and crypto. Many of them have been absolute bangers, so pop over there and take a look. Link in the description below and also the comments. With all that, appreciate all of you watching.